Good evening and thank you for joining us on Capital Market this evening. I'm Temple Ashaju. Let's go straight to the markets as equities closed the last two trading days this week on a positive note, but was unable to recover from the effects of the huge sell-offs on the first three sessions of the week. Market direction shows that the bears outperformed the bulls generally, and if you look at the indices, you've got the all-share index settling at 29,830.70, down some 2.64%. Equity capitalization kept closing at 11.124 trillion naira after it had settled at 10 trillion naira days before. Now, volume for this week was 1.265 billion, and it's valued at 14.07 billion naira, and all that took place in 19,274 deals. Basically, this week, if we measure investor sentiment, we saw a very, very negative market breaks as a lot of the bears outweigh the bulls in the market. The banking sector was down 3.54%. Insurance segment of the market, 8.73% down. Consumer goods was down 26.04%. But just the industrial goods segment of the market was positive by 11.88%. And the oil and gas declined 18.84%. Now, in the NASD-OTC, which represents the unlisted securities market, you've got the ASI, the USI, settling at 749.47 after we saw an increase of 3.20% week on week. Market capitalization closed at 540.56 billion naira. And the volume year to date is 11.54 million units done so far, valued at 177.96 million naira. So far this year, we've seen 67 deals generally in the market. And over to the fixed income market, where we'll review the performance for the month of December 2018. We saw that the FMDQ OTC Securities Exchange is reporting a turnover of 17.71 trillion naira for the month ended December 2018. The fixed income and currency market updates represents a 9.09% decline or 1.77 trillion naira decrease month on month, and a 49.33% or 5.85 trillion naira year-on-year increase as treasury bills and foreign exchange segments of the market as major drivers in the period. Now let's look at what we have in the news this week. We know that the Nigeria Mortgage Refinancing Company, NMRC, this week listed its Series 2 bonds on the Nigerian Stock Exchange. The chairman, Mr. Adeyemi Kande Johnson, explains that the instrument is valued at 11 billion naira with a 13.80% coupon Series 2 fixed rate bond.
I'm sincerely delighted to be here today to list our second bond. This is not our first time here, we've been here before, and it looks like the more we come, the bigger we get. The last time it was 8 billion, now it's 11. We're hoping that both the size and the frequency will increase. In the grand scheme of things, this is still a drop in the big ocean, given the enormity of the amount of funds that we have in Nigeria, but we're making good progress. We're making some baby steps now, but it will turn into some slow running, and then we'll start running very fast because almost all the oils and all the wings that we need to have in place are now in place and are beginning to work with one another. So we hope that in the very near future, NMRC will become a regular issuer and the size will become bigger.
And the business combination between the Cement Company of Northern Nigeria, CCNN, and Boa Group's Kalambena Cement has culminated in the NSE 12th largest company. The chairman of CCNN, Mr. Abdul Samad, confirmed this during the team's visit to the Nigerian Stock Exchange this week.
As we all know, CCNN has been a listed company since 1993. So over 20-something years, and the merger between Kalambena and CCNN, has made this company to be one of the largest, within the Nigerian Stock Exchange. I believe maybe the 12th or 13th largest company today. So we're really very excited, and we We want to thank NSE for the support. And going forward, as I was saying earlier, we have other businesses that we are looking to actually come and list on, on the exchange, because I believe it is important, if you are doing something and, adding value, you must, be able to invite others to come and also reap the benefits. There are so many businesses in Nigeria that are doing quite well, and I believe that if you are doing well, you should invite others to come and see what we are doing. That is exactly what we have decided to do. We have other businesses in the agri sector and the mining sector, and we are discussing with the exchange to see how we can actually list those companies.
And the Nigerian Business Coalition Against HIV/AIDS is a 36-member group of private and public companies, some of which are listed on the Nigerian Stock Exchange. And in support of the federal government's $15 million HIV Trust Fund, the managing director of Total Nigeria, Mr. Nicholas Terraz, explains how much some listed companies are committing to the project for takeoff.
Well, at Nigeria Business Coalition Against AIDS, we believe that the fight against HIV/AIDS is a common cause that needs to be mobilized, to mobilize not only government, international donors, but also the business community. So we want to mobilize the resources and the expertise of the business community. So today we have approximately 36 members. Total is a member. Access Bank is a member. So we are contributing resources, but we are also contributing some of our time to advocate for this cause, to advocate for the fight against HIV/AIDS. And this is what we are proposing other companies to do tonight, to join these business coalitions in order to make a bigger impact. There is different level of commitment for private companies. Private companies can commit from 5 million to 15 million nairas. So the highest level of commitment is 15 million naira. That's what we're doing at Total. And after, of course, all companies are welcome. All companies who want to contribute are welcome, regardless of the financial contribution.
And now the financial services and investment banker, VFD Group, has sold off its 30% stake in NEM Insurance PLC. The sale of the 1.6 billion ordinary shares fully paid up capital was concluded in December 2018. VFD Group, in a statement, notes some differences with the management of NEM Insurance as the motive for its exit. The investment banker has, however, raised 2.78 billion naira in rights issue and private placement to pursue its goal for the 2019 financial year as it looks to convert to a public limited liability company structure this year. Well, it's been an interesting investment year so far in the Nigerian capital market as equities see a fast month-to-date loss notching higher by 5.09%. And in the debt market this week, we saw the return of more market players as analysts and traders anticipate higher yields to resume amid the central bank's aggressive mop-up that we've been seeing lately. And the Debt Management Office, the DMO, also this week revealed that the country's total debt stock increased marginally by 0.2% quarter-on-quarter to 22.4 trillion naira in the third quarter of 2018, taking the nation's debt as a percentage of its GDP now to 24.2% as at 9th month 2018. Let's join the Managing Director of Kairos Capital, Sam Chidoka, for insight into the markets, all the segments of the market. Good evening. Thank you so much for making it through to Capital Market this evening.
Yeah, good evening. Thanks for having me.
Yeah, so let's start with the equities markets. It's been a slow start. We've seen some 5% decline so far, month to date, as things are going. From the Kairos Capital perspective, give us a sense of what is responsible for this.
So the equities market has had not so good run. So this starts back from 2018. Year to date 2018, we had a loss of about 19% of the market. And it was expected that it would carry on to 2019, at least Q1. Because part of the reason you're experiencing this is that our market has a huge influx of upwards of 40% of it invested by foreign investors. And these investors are wary of our election cycles. So usually during the election cycles, this happens. So if you add the election cycle happening right now with the presidential and sub-sovereign elections going on, and you add the fact that our economy hasn't been on a fantastic run so far. I mean, GDP growth rate of less than 2% isn't the best. So you will see that all of the things that have happened so far, whether in the way we've run the economy or in the way companies have performed, in results that are coming out, and the election cycle, you would understand why the equities market is where it is right now.
So we're also seeing this sort of trend now, rebalancing of portfolios. Everyone is trying to move. You either sell off or you reduce, or you quickly take profits on a bit of what you see on the likes of Diamond Bank and all of that. Where are these folks moving money to then?
So you see that for a Diamond Bank, for instance, is because of the Access Bank acquisition that is happening, and people have seen opportunity. When you see what Access Bank is paying, and you see the market price, and you see that there's probably an uptick, there's arbitrage, opportunity for arbitrage, and so people went into Diamond Bank hoping to benefit from that. But what's happening is that most are moving from the equities market and moving more to the fixed income market. Look at what yields are doing in the fixed income market. The yields are going up. Even if you look at the central bank open market operations that they do, with the yields the central bank is offering, you don't have full subscription. Then the central bank comes and do what they call special OMO to raise the money that they require, because people are generally moving away from the equities market and going into the fixed income market and the T-bills market and the bonds market, because the yields, government is borrowing heavily at this point at interesting yields.
So some 666 billion naira maturities or inflows basically to be seen next week. And we know that the CBN has been carrying out these mop-up operations aggressively on a weekly basis. Is that really going to exert some form of pressure on the markets?
Well, we expect the CBN to continue the mop-up because then again, your CBN is like juggling so many balls at the same time. So you have election expenses that are leading to inflation. And so you're trying to curtail liquidity in the market to curb inflation. So CBN will have to continue doing the mop-up through the OMO to reduce liquidity in the market and curtail inflation, at the same time trying to manage the naira. So you see them juggling some balls. We do not expect that it will change dramatically. It won't change dramatically. What will happen is that in terms of the maturities, when the maturities hit the market, you will see the very next day or 2 days after, you see CBN come back and mop up the liquidity in the market, and the circle just continues. But we expect that yields will continue to inch up in the market, in the fixed income market.
How come the whole mop-up exercise is not sufficient enough to reduce the yields in the market? Because that puts a whole lot of pressure on the CBN and federal government on its own part, having to service all of these debts.
Well, so it's a catch-22 situation that the CBN finds itself in. You're doing your best to reduce liquidity. You're doing your best to fight inflation, but rates are also moving high. You've pegged the prime lending rate at 14%, and that also means that with that base rate, every other rate falls on top of that. If you want rates to reduce, then you have to reduce the 14%. If you do that, then you will have more inflow of people trying to take advantage of the fixed income market. So it's a catch-22 situation that CBN finds themselves in. What I expect that they will do is that they will ride out this election period and try and manage and juggle this election period and ride it out. And after that, perhaps things will start to stabilize, and perhaps the foreign investors will come back to the market, hopefully, depending on how the elections play out, depending on how people accept the results, whether they go to court or just make a call and move on with the results. All of that, will see how our market will play. But it's interesting to note that where valuations are right now in the market, people will get a good run going forward from the equities market.
That's interesting. But then this is also a very important part of the discussion, because again, we've seen the DMO revealing the fact that our total debt stock increased marginally 0.2%. We used to be 19% to GDP, but now it's 24.2%. What does this bring to mind?
Well, if you look at it in terms of comparing ourselves with some other notable countries in the world, in terms of comparing ourselves with debt to GDP, for some countries, you might argue that ours is pretty low. Some countries have debt to GDP up to 70%, some close to 90%, some 50%. You said 24%, it's okay. However, the point is we have to look at is our debt service. What is our debt service?
I think we should continue this conversation after the break because it is important for investors' consumption, actually. We'll continue the show in a minute. Stay with us.